this IPO is very interesting for these two reasons. So they're creating new shares and someone is selling shares. Sounds complex, but very simple. Derrimon Trading Limited, they're a listed company. They're on the junior market right now. And they own a lot of this company and they're selling a piece to us. So Derrimon will be getting some funds.
But they own all of it.
They own well, the breakdown, I don't know if you want to find the breakdown. The breakdown is there. It's, I guess,
I guess they issued some shares. Yeah, they did. To some of the managers.
And then like you have the Prince man, which is Derek Cottrell and so on, that owns. So it's not just specifically Derrimon, but they own a big chunk.
Up to right before the offer, they did own all of it. Like I think
I think you passed it.
Yeah.
Oh, wait, I don't know. I actually can't see.
Yeah. Yeah, they're saying right before the invitation, but they own like 80% right now.
Yeah, 80%. So they're selling a chunk, and if you scroll down some more, I think it's post. So if you zoom in a bit more, so we can just see a little bit. Yeah, so you can see that Derrimon, after listing, their aim is to own about 50% of the company. And then they also have
50%.
Just under 50%, 49.4%. But they also have their trust, the employee and shareholder pool, which takes them up a bit above that. And you can see what it would look like. So the general public would own about 11.88% of the company. And then you have key partners, strategic investor reserve, those kind of people. They will own a different amount. So you can look through. So crucial thing to note is that half of the shares that are being offered, Derrimon is selling. The other half is being created by the company. So the company is creating new shares and then selling that to the general public, the strategic investors, etc. So the company will get that other set of funds, and Derrimon will get the other half of funds. So you can see it: 416,666,667 ordinary shares will be newly issued. That's newly issued by the company, which is Woodcats, and then 416 mil are existing ordinary shares being sold by the selling shareholder, which is Derrimon Trading Company Limited. So yeah.
And I guess Derrimon does what? Sampars. They do like different foods and stuff like that.
Yeah, Derrimon. So it's Derrimon Trading Company. I might have, but they do it's a lot of wholesale stuff from my understanding.
I've been to the supermarket. I've been to some. There's this one by Manor Park, right? Or one of them is by Manor Park.
Maybe, I think so.
Yeah,
yeah.
Select grocers. Yeah.
I remember shopping at the Sampars in Mandeville when I used to live in Mandeville. Yeah. But yeah, Derrimon, it's good to kind of know what Derrimon does, because as you know, they're the distribution, wholesale, manufacturing. So they do quite a bit of things. So it's kind of good to know who the top dog is in the company, the number one shareholder. So yeah, and that's their website. You guys can take a look at Derrimon and so on. But for Woodcats specifically, they will be getting approximately, what's 90 cents times that 416 mil?
It's a little under 400 mil. It's like 370. Yeah.
So I guess this is a good way to segue into what they're actually going to be using the money for when they actually get the money. So that's the part of the prospectus called use of proceeds. It's useful to know, what are they going to do? Like when they take our money as investors, that's if we are buying. But if you are buying, what are they actually going to be using the money for? And they're raising capital specifically to upgrade its operations and boost capacity. right? So some people take money and, fund acquisitions. We've seen some pay down debt. I think Atlantic used the IPO money and pay down debt and so on. But this company, the proceeds, 187 million is going to be expenditure. Basically, what that means is they're going to purchase some new things, new industrial equipment. And I actually started to Google a lot of these equipment because I have no idea what a head resaw is. But it basically allows them to cut pallets, like the vertical pallets, easier. So that should boost efficiency, and like forklifts and a dust collection system, so you get more sawdust out of whatever waste that they're producing now, and pallet nailing machine, a bunch of different wood processing
they're
machines
basically
as
just
well.
buying the machines that they use to process all of the stuff and make their products. So I guess they want to be able to make more pallets,
Yeah, they want to be able to and make them efficiently too. So if they used to make 10 pallets every hour, they probably want to boost that to 20 or so on. So, and you can kind of estimate what that would look like, because I think in the prospectus they said they make 300,000 pallets annually. So if you divide that by the amount of years, like they make approximately a bit less than amount of days for the year. So divide it by 365, it's
I wish they'd tell us like how many, like when they buy these machines. It'd be nice if they told us, okay, if you're making 300,000 now, are you now going to be able to make 400,000? Are you now going to be able to make 600,000? So that's like, I guess a better estimate of, hey, they could double their output. Like if I don't know wood, I mean, I don't know much about wood. I don't know what a head yeah, look at the picture, but like okay, you're buying the head resaw. Is it that the head resaw is to replace an existing head resaw? Is it that you already have one head resaw and then now you're going to have two head resaws? I guess I wish there was more context for this, because this is just saying, okay, you're spending this money. It will allow you to make more, but how much more? Double, triple, 20% more.
Yeah. That would be good to, if we had the CEO on, we could have asked him all of these things. I don't know of other people asking him those things when they're on those shows, but Limitless, we go really deep into like the questioning and so on. And we have an episode coming up with another CEO of a listed company, so you guys should check that out soon. It hasn't released yet, but it will in very soon, very, very soon. But yeah, I mean, to know those things would be really good, and would really cement my decision on whether I'm buying or not. But let's go into some of the other things that they said they're gonna do, because clearly, their aim is to create a more. This is they're trying to increase modernization, just to make, I guess, Woodcats a bit more automated and efficient, and just to generate more capacity as a manufacturer. But in terms of the rest of the money, which is about 165 million, that's going to working capital. And that's basically cash to support day-to-day operations. Working capital sounds very fancy, but it's just, you just give us more cash, so we have more cash on hand to support day-to-day operations just as the business grows. And I think about this like this. An IPO, yes, you're raising money, but this is also a marketing push. You're putting your company out there in the public's eyes for public scrutiny, but for public interest as well. And who else is in the public? Me and Preston, the little investors when I have enough money. But then you have the bigger investors who may look into our Woodcats and be like, oh, I could buy millions into this. Or bigger clients as well. Oh, we've been looking to the wood pallets. Maybe we should link Woodcats. So I think of it like that. And so normally you tend to see a little boost. I don't know if I know you don't really watch football as much, Preston. I'm a huge football fan. And whenever a manager gets sacked and then there's a new or fired and they get a new manager, there's something called a new manager bounce. In my estimation, for an IPO, there's like an IPO bounce where you see more business coming to the company because it's just there's so much more PR about it. There's so much more like eyeballs on it. So having boosting working capital works in its favor, especially if now you have clients, you're taking on bigger clients, and you say, oh well, we need to do a bigger order for lumber and so on, so we have cash on hand to be able to order more and to be able to generate more in a shorter period of time. So yeah, it's just to have a lot of cash to be able to be agile as a business, so you can fulfill larger orders, have a sufficient inventory for lumber, without getting into any cash crunches.